Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from Exchange in Miami. Joining me for this segment, we have Raj Lala, President and CEO of Evolve ETFs. We're going to discuss 2024 trends that are going to define the market, as well as Canada's first technology-focused ETF, derived from the Nasdaq-100 Index. Raj, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
And some impressive growth here. You launched Evolve ETFs in 2017, nearly doubled your assets every year, close to $8 billion in assets under management now. What were the factors that led to this exponential growth?
So we started 6.5 years ago, and what we really wanted to do was kind of build out a diversified lineup of products, but we also wanted to be differentiated, and so what we started with was a lot of disruptive technology ETFs. So first cybersecurity ETF, first cloud computing ETF, first e-gaming ETF, and then we kind of barbelled that out with some actively managed fixed income, partnering up with some external managers that had a great track record, like for example, Allianz Global Investors, who are the sister company to PIMCO. And then throughout time, over the last few years, we've added covered call funds, cryptocurrency, cash alternatives, with the goal of always having a handful of products that will work in the different phases of the market cycle. So it's gone well for us.
And you brought 7 ETFs to market last year, including your first technology-focused ETF, derived from the Nasdaq-100 Index. How did you come up with that idea, and how do those kinds of funds work for investors, and who are they designed for?
Yeah, it's a great story because it relates back to this conference, because we had lunch with a few people from the Nasdaq this time last year, and we were talking about FANGMA or MANGMA, whatever acronym you want to use, and we were talking about how they've driven so much of the returns of the Nasdaq and the S&P 500. And I think one of the most important questions I asked was, out of curiosity, how many of the companies on the Nasdaq 100 are actually technology? And a couple of them chuckled and said, it's funny you asked that because not many people do. It's actually only about 40 of the 100. And I had this kind of light bulb moment, which was, that's interesting because I think most people that invest in Nasdaq 100 ETFs are doing so for the technology component, not necessarily to own more Pepsi or more Marriott or Costco, like consumer discretionary. And so I said, there's an idea here. I said, what if we actually work together with just the tech component of the Nasdaq 100? And then they said, that's a great idea. We've actually been running an index for the last 10 years. Took a look at the index data, and no surprise, it's outperformed the Nasdaq 100. And I said, we have to launch this product. So it was the first one of its kind in Canada. So it's kind of like trying to deliver to investors what they thought they were getting when they were buying the Nasdaq 100.
Do you think that trend will continue with the tech sector specifically outperforming the broader Nasdaq 100?
Crystal ball question, right?
Of course.
Well, what I would say is that I would never bet against technology. I would never even bet against, the Magnificent Seven or FANGMA stocks, whatever term you want to use. Maybe it's going to evolve with time. No pun intended, free marketing. But I think that they've become stalwarts within the market today. So I do believe you're going to continue to see strong performance.
What trends do you think will define the market this year?
Crystal ball question again. I think you're going to continue to see growth in technology. I do think, though, that it probably makes sense to have a more diversified approach to technology, which is the product that we launched with Nasdaq. I do think that interest rate sensitive securities, especially as we start to see rate cuts, actually will perform, not just technology, but maybe financials and utilities. And I also think that as we go into the latter part of this year, I know that the probability of rate cuts probably just decreased this morning.
After the CPI print.
After the CPI print. But I do actually think that people will extend out their duration as it relates to fixed income.
Well, to your point, with active fixed income growth, I mean, we're seeing that for sure. That's been a big trend.
Definitely. And we're already seeing it taking place.
All right, Raj, I appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Exchange. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.